Hi there traders, this is Steve Miley, the market chartist for FxExplained.co.uk, and this is the second in our now going to be regular series of looks at the FX markets, FX Explained in the Forex zone. So we're going to run through in here the 6 major Forex currency pairs: EURUSD, Euro versus dollar, Pound dollar cable, US dollar Japanese yen, Aussie and Kiwi dollars versus the US dollar, and the US dollar versus the Canadian dollar. And we're going to kick off here with the euro versus the dollar. Broad US dollar weakness has been the major theme in here since the middle of the week, and generally really throughout June, but certainly resurgent since the middle of the week, since the Fed were more dovish. A more dovish Fed equals a then more weakening of the US dollar, and that's certainly what we've seen in here over the past 48 hours. And we did get that push initially down through 112.00. That we were bullish before then, but then that's neutralized the bullish theme. But then this resurgent rebound in here, threatening this 113.48 level, and back up through there would again reinforce this basing pattern in here, this longer term maybe basing pattern. So potentially still upside risk for euro versus dollar. Let's take a look at the pound. Again, the pound benefiting in here from US dollar weakness, notwithstanding the fact that we go down to now just 2 left in the Tory Conservative Party, Tory leadership context. Boris Johnson and Jeremy Hunt really looking like now Johnson is almost certainly going to win and be the next UK Prime Minister. And he's obviously had this kind of fairly hardline Brexit approach. Potential there for a no deal. That is what's seen in here, this pound weakness in here back earlier in June. However, the US dollar weakness outstripping those, and maybe a slightly softening tone from Boris Johnson in here, seeing the cable push higher up through this downtrend line in here, now sitting at this neckline. It's like a neckline to a basing pattern in here, and if we get above that neckline to the basing pattern, we stopped there yesterday at 127.27. Up through there will signal a more positive tone for here at 127.63, and critically, if we get through 128.14, this swing high from May, then the outlook would shift from intermediate term bearish to neutral. US dollar versus the Canadian dollar. Again, US dollar weakness, and such an aggressive plunge in here for the US dollar in here, reinforcing the more bearish theme. We'd fouled at this resistance area here, just below this resistance area here at 134.32. We fouled back from, and this resistance area was just above that. Fouled at that resistance area, rejecting a shift to a more neutral tone, and this plunge in here reinforcing this previous plunge we had earlier in June, which has reinforced the bigger intermediate term bearish pressures and also short-term bearish pressures for today. Aussie dollar, again US dollar weakness, Australian dollar higher. Hopes not only US dollar weakness from the potentially more dovish Fed, but also possibility of a more positive tone in here regarding the US-Sino trade negotiations. Trump and President Xi Jinping in here potentially going to be meeting up at the G20 summit later in June in Osaka, Japan, and that has helped the Australian dollar higher as well. So both Australian dollar rebound strength from that and the US dollar weakness we've already mentioned, pushing us higher in here, and real risk now to this 69.73 level. That would be enough to neutralize bearish threats, and even 70.22 for a more bullish tone. The Kiwi dollar has already neutralized those bearish threats with this really strong push higher in here. We had the push back higher above the 65.93 level up to 66.04, and that's neutralized bearish pressures, and we now see a range 64.84.80 down here as potential double bottom support. 66.81 is going to be critical. That will confirm the double bottom and shift the intermediate term outlook to more positive, certainly aiming higher into today. And finally, US dollar yen plunging since the Fed, taking out the support lows here, having been in consolidation right throughout June, plunging through 107.79, repeatedly failing in this 108.72.80 area, respecting the downtrend line that comes all the way from April, accelerating away from that downtrend line. Overnight in here, we've pushed down through this 107.10 support level that we put in after the flash crash here at the beginning of this year, and then the rebound in here, slight rebound, but hardly any rebound from the low here at 107.02, just respecting 107.00, but we see risk down through here to challenge this 106.72.55 area, potentially lower today, and looking for further downside into the second half of, the very late part now of June. Okay, so that's been Steve Miley for FxExplained.co.uk, and you've been in the Forex Zone.